going. So what we were just talking about was that when we have a trade with Trend Trader, it's because we have those 3 time frames lined up, the 4 hour, the 1 hour, and the 15 minute. And I would expect quite a bit more than 50% of the time that the 15-minute trend would go against the trade. So, I expect that to happen the majority of the time. So it's not an issue. I expect that to happen. The 1 hour trend, when it goes against the trade, so you'd have the 15-minute and the 1 hour going against your trade, still not really an issue. That happens a fair bit. The optimized settings are designed to be able to handle that. When all 3 time frame goes against you, I don't like that. But I'll just repeat what I said before for the recording. I know from experience and from backtesting that even when all 3 trends go against your trade, more often than not, it still comes good and works in your favor and you take profit. I know that pretty much for a fact on quite a few pairs, because I did play with adding a feature to Trend Trader where if all 3 time frame trends went against the trade, it would close that trade then and there to minimize the loss. And when I added that feature, no, it wasn't one I released to everybody, but once I added that feature and back tested it, I made less profit. So that just tells me that more often than not all the time, but more often than not, even when all 3 time frame trends go against you, more often than not, it will still turn around and end up in your favor. Just trying to think what I was going to draw on the whiteboard now. We're talking about, okay, why I expect the 15-minute trend to go against the majority of trades is simply, if this is the market, excuse my drawing skills, and okay, we've got an uptrend going. Let's assume we have all 3 time frames saying it's an uptrend. And so we've got all 3 time frames saying it's an uptrend or a buy trend. The software recognizes that, and it's going to wait for a bit of a pullback. So it needs all 3 time frames to line up. Then it waits for a little pullback, which we've had just here. Then it waits for confirmation that the trend's going to continue. So right about here is where the software would take out a trade. But if you can imagine this trend continued as it is, it would go to there, and then it would come back, and then it would go up, and then you'd be in good profit and you'd be hitting profit locks. But if that's where it takes out the trade, the vast majority of the time, probably 80%, I don't know, I'm making that figure up, but well over 50%, goes into a little bit of profit and then into a bit of drawdown. And then it goes into profit, comes back to almost break even, and then goes into good profit. And somewhere around about here, the profit locks would kick in, and hopefully on the next little retracement, it doesn't quite tap you out on the profit locks, and then it goes on, to get right up here to the good old TP. So that's how the software works, and that's why I expect the majority of trades to go into at least a little bit of drawdown the vast majority of the time. Make sense?
Yes.
Can I have a yes with a little more enthusiasm?
Yes,
Yeah, it's
Yep.
good.
good presentation, Les. Well done.
Hey, Liz, if you done many manual trades, like, if you've got one that's going all right, if you've done many manual trades on it just to help it along a bit, or never bother?
Not on my prop accounts. I've got an actual manual trading account that I also have the software on, and I do manual trades on that. But I haven't done any manual trades on my prop accounts.
Yeah, I was thinking about it the other day, and I just about hit the button. And I thought, no, I know how my trading goes. I've lost enough money. I'll just lose some more. So I didn't
Yeah,
bother.
I think it's good to have a manual trading account for such occasions. it could be a prop account, but for manual trading, or it could be, a small live account for you to do that with.
Sounds like Nola's having a party.
Is that
Yeah.
Nola's party on? Nice. Yep, it was. Yeah, so I've got to think of some more exciting stuff to say now that we've got the record button going. But so I did sort of rush this Trend Trader Plus through this weekend to get it available to everybody. Because I said I would, and because I tested it out for a week and it did perform better in real life as it did in the back testing. So I wanted to push it out. So we do have, I believe there are 10 optimized pair settings. I think that's what I gave you, wasn't it? 10?
Yeah, 10.
So I did drop pound USD because it wasn't giving very much profit in the back testing. Almost worthwhile, but just not quite. I found from the back testing, those optimized settings, just so everyone knows, I did back testing from the 9th of January through to the 17th of April. 17th, because that was when I started back testing the new model. And I started on the 9th because that got rid of all that Christmas, New Year period, and the market should have been back to a semblance of normality there. So that's why I started there. I do like to do my back testing over 6 months, but I didn't really like I like the optimized settings I gave you, don't get me wrong, but I didn't like the fact that it incorporated that whole Christmas, New Year period. So there's a lot of downtime, there's a lot of markets where there's hardly any movement. There's not much going on over that time. So that would have interfered with the results with the optimized settings a bit. So I didn't do 6 months this time. It's only 3.25 months. So probably in another couple of months I'll do them again, and I'll be able to do the full 6 months starting from the 9th of January. And I found the optimized settings for the 3 months before Christmas are completely different to the best settings for the 3 months since New Year. I know for a fact there's been the markets as a general, like they're all a bit different, but most of the markets, Forex and indices, have been quite slow. There hasn't been as much movement or volatility as much. The high points and the low points haven't been as high and as low this year as what they mostly had last year. And I've also seen a few emails from different brokers sort of saying the same thing, and that would be why the optimized settings are quite different. Whereas,
Well, I noticed that, Les, because our trades haven't been getting to their take profit, not very often, have they, this year?
no, well, they never do a lot. Like, but what I noticed when I first started doing the software, I was back testing from July to. I went back further to start with, but then I did July to December, and the first two lots of settings weren't terribly different from each other. But what I've found so far this year is it is quite noticeably different. I know one more thing I might just share too, because I'm surprised I haven't had more questions about this already, was the entry type, because that's a new exciting setting that I haven't mentioned to anyone before I released it. So like I mentioned here, the software waits until all 3 timeframe trends are lined up, then it waits for that retracement and then confirmation that the trend's continuing, and then it'll take out a trade. So with that entry type, it's still going, doesn't matter whether you do 0, 1, 2, or 3 entry type, it's still going to need the 3 timeframes to line up. It's still going to wait for that retracement, but then there's some slight different calculations to determine what it thinks is a confirmation that the trend's continuing. So it's just that final little bit that it's going to change slightly. And, you know, that's also one of the main things that allows it to work on the 5-minute time frame and even the 1 minute on a couple of pairs. Before that, before this model, and because of that different entry criteria, it didn't matter what pair or what setting I was using. It was 15-minute time frame was the sweet spot. Now, because of that, we've got a lot more options, different time frames, different entry types. And as you can see, I added AUD CHF to the optimized settings pair, and it was quite a good one. A little bit of drawdown, but the results were pretty good.
Another half hour.
And that was a pair that just simply didn't work on the previous versions. This might be good to explain. So when we're talking about getting multiple trades on the same time frame, on the same pair, like here, let's say right about here, all 3 time frames are lined up, and then it waits for a retracement and it takes out a trade. Okay, that'll be a trade. The time frames are still lined up. We get a retracement, and bang, we would get another trade here. And we'd get a retracement, and bang, another trade here. And we now have 3 trades playing out. That's how that would work here. I mean, in real life, a trend's never quite as neat and tidy as that. You know, the trend could come up, and it could come down,
natural diamonds each have their own unique history.
and then it might go up a bit further. Yeah, that
Natural diamonds are really a souvenir from the beginning of
that
time.
might be the
which
actual
is
shape of
why
the trend.
that was
The
usually
actual
chosen
trend.
as the perfect symbol.
Yeah, so we might end up with a trade there, and then we get a pullback and nothing, and a pullback and confirmation, and then we might get confirmation and a third trade there. They might, sometimes they'll end up spaced apart, sometimes they'll be close together. Last week I ended up with 2 trades right on top of each other, just because that, you know, one got, you know, the market obviously was trending up, but then it sort of, you know, went sideways for a while, or almost. So the software took out a trade here, and then it took out a trade here as well. It just happened to be at exactly the same level. So they won't always be spaced apart, but I think if you can think of it as that pullback and then continuation, you get a trade. Pullback, continuation, you get a trade. So that's how it's meant to be, perfectly like that. But if the market's not going up perfectly like that, then it can be a little bit different.
He has his mother's eyes and his father's cheeky grin. Prince Louis, he's turning 5. 2 photos have been released.
Hey, so Liz, that will take out 3 trades on whatever currency that it's doing. So with the 5 trades that we've got it set on, if it's got 5 open, will it do that, or no more? It won't take another trade.
Depends on your setting. On yours that we set up, we've
Yeah.
got it set to have a maximum of 3 per pair
3 per pair.
and 6 in total.
Yeah.
So that's all yours can do.
Yeah.
You know, depend. You know, you might leave it at 5 maximum per pair, and bump it like on my, not on my prop account, on my other account, I've got it set at 5 maximum per pair and 10 in total.
Yeah.
That's because I'm not concerned about 5% drawdown for a prop firm on that one.
Yeah, well, that's the big problem with these prop firms. That's why I like Bowspec, because it will allow an 8% drawdown. It doesn't sound like a hell of a lot, just another 3 spots, but it makes a
bit
big
of pressure off though, doesn't it?
Yeah, it does. Takes a lot of pressure off. Whereas Concept, like, you know, they're, well, I suppose they're all ruthless. Once you hit your once you've hit your bloody your stop, you're out. That's it, finished.
Yeah, prop firms are really, really good, but they are never as easy as they sound, you know. Even like the good old FTMO, you know, make 10% for the month, you know, that's pretty good, but definitely doable. And then the second month, you've only got, then you've got 2 months to make 5%. That's easy as, but it's not. Sometimes the market just simply doesn't want to give you 5% for the month. And, so with prop firms, you just got to be conservative because sometimes you'll get a few trades in a row that go bad. Doesn't matter whether you're talking manual trading or, using an EA, but you got to really plan for the worst, which, unfortunately will reduce the profit when things go your way, but better than blowing it.
Yeah, I think there's really a personal account would be better than a prop firm because you don't worry about the drawdown. So if it draws down 10%, so who really gives a toss?
No, definitely. Like, well, what I do is I take every time I get a payout from a prop firm, I put a portion of that, go and spend some at the fishing shop. I put some into a new prop account. I put some into my personal trading account. So it's spread all around, but to build up that personal account as well. But yeah, a personal account's good. But, to me, we're always sort of talking about how to make a full-time living off whatever we're doing online. And to make a full-time living, off Trend Trader on your own money, you're going to want, at least $50,000 in an account of your own.
Yeah.
Maybe a little bit less, but you'd have to go higher risk per trade and all that. But and not everybody has that sort of money just to put into a trading account. So that's where prop firms are good to start to build up a balance. Like for a prop firm to be making a full-time income, you're probably going to be wanting a $100,000 or a $200,000 account. The reason you can make a full-time income off only $50,000 of your own money is because you're not worried about that 5% drawdown. If you're only going 0.5% risk on your prop account, you can go 1 or 2% risk on your own account because it doesn't matter if you get into 10% drawdown. So you can make more money off a smaller balance because you can use that balance more because a little bit of drawdown isn't a concern. The only issue with your own money in an account like that is it's even easier to get greedy. And if you get, and I know if a trading system's working, it's working, but the way greed can get you on your own personal account is let's say I've got Trend Trader on my own money, I've got the risk set at 1%, and it's going great. I have 1 or 2 months in a row where I make decent profit. And I go, cool, this is good. I'm going to bump it up to 2% now. Murphy's Law being as it is, it's that very next week where you take the biggest loss you ever have, and you do that with double the risk. So you might have 2 good months, and then 2 bad weeks, but those 2 bad weeks are straight after you double your risk. So you basically blow a month or two's worth of profits. So that's, if something's working, you probably want to start stepping it up a bit, but that's the risk you take. If you ever increase your risk per trade, it's that very next couple of weeks that's the risk. If the next 2 weeks go well then you've built up a bit more of a buffer and you can handle a bit of a loss. But if you have that bad week or 2 straight after increasing your risk, then it can knock you around a fair bit.
Yeah, I believe, Les, if it's not broken, don't fix it. You've got your settings and just let it do its thing.
It's true.
Because,
true and wise word, Barry. Just
yeah, I've
stick with
learnt the hard way, Les. So, you're happy with your couple of percent a week. And if it can keep on boxing along doing that, there's absolutely nothing wrong with it.
Like with the prop accounts, all different prop firms are all a bit different, but I think a fair few of us are using concepts. So you've only got to make 7% profit to double your account balance. So if you can make 1% profit per week, that's more than enough. You double your account balance every 7 weeks. That's quite huge. But then if that's only 1% a week on your own money, that means, after 7 weeks, your balance has only gone up by 7%. That's relatively slow. Still okay, but, that feels a bit slower. So, but on your own money, you could afford to, double the risk and make twice as much. So sometimes I see in the chat groups, in our community chat group, somebody will be using a prop firm on really conservative settings for a prop firm, and then somebody else will be using different settings for a manual account, and they'll be comparing themselves to each other when there's no way you can, because they've got totally different targets and settings because of that. That's why when I've been talking about the new Trend Trader Plus version that I made 4.6% on this week, I do then go, but that was on 2% risk because it wasn't a prop account. But even if I was running the same settings as my prop account, that still would have been probably 1.5% profit for the week, whereas the old version lost 1%. So that's still quite a decent improvement.
So on your own personal account, Les, do you run it at 2% or is that a bit much?
That's what I'm running at the moment, but I am always on my computer and back testing and keeping an eye on it and playing and tweaking, so.
Yeah.
But, I would never tell somebody to jump in with lots of money and high risk straight up. If it's their own money and they choose to do that over time, then that's up to them. But no matter whether you're using Trend Trade or a different EA or some manual trading strategy you've learnt, you need to use it. If not on a demo, then at least a small live account. And until you've proven to yourself you're consistently making profit. Because until you can, just because your mate's been doing the same thing and making consistent profit really doesn't mean you can. Even when we're talking about an EA, it still can be differences. It might be, you might not turn on for NFP and you take a loss where your mate didn't. There could be slight differences between brokers. He could have different pairs to you, even if you think they're the same. Like I know a lot of people had a US yen trade last week. I didn't. That was because I already had my maximum of 5 trades open. So when that trade popped up, I didn't have a space for it. So I missed out on that one. So it's a little bit like, the butterfly effect, really. If there's one slight difference between 2 trading accounts, even if they're 2 trading accounts are using the same EA on the same settings and everything's working exactly the same, if there's a slight difference at the start of the week, then by the end of the week or the end of the month, that could butterfly effect into something, quite a different number of and different types of trades. Like I said, I had, and this would just be a difference between brokers. I had, I don't know what trade. I might have had a Bitcoin trade open, which gave me my total of 5, and somebody that didn't have Bitcoin open, they end up getting that US yen trade. So now we've got 2 totally different trades running, which can obviously make completely different results. But Trend Trade is pretty good. You don't get a lot of differences really compared to some EAs, but you definitely see differences from time to time.
Hey, the other thing, Les, these trading platforms, are they totally honest, or are they looking at the trades and those, like, when you're trading manually, like, you can just about be a bloody, it'll hit the stop loss and then it'll automatically shoot back up to where it was. So
Yep.
are they messing with it or not?
You're talking about the brokers?
Yeah.
Potentially sometimes, but it's mostly the big institutions that are doing that. You think Trend Trade is a good software? You should see the bloody, not that I know, but not that I've seen, but they have automated algorithms to know that monitor where everyone's stop losses are. They know
do.
where the vast majority of retail traders, which is what we are, they know where we're putting our stop losses. So they push the market to hit the stop losses to get all that money before they then go back the way they want it to. And the reason they can do that is because they can put a $10 billion trade on just to push the market down. That's their little trade, a $10 billion trade to push the market down 100 pips. And then they put their big trade on to push it the way they want. And the big trades, a lot more than million, not a lot more than $1 millions and billions. But so what you were just talking about, let me go back to my whiteboard. And let's clear it all. If you've got a market, it might have been, trending up to there for a while, and it might have consolidated here for a while, and then done a big sudden drop down, and then it might do whatever for a while. All right, so we've got a market that's been trending down, and then it's consolidated here for a while. I mean, there's a lot more to it than just what I'm saying here, but where this market, so these are all just like little candles, and this here is a bigger candle. Let's just say that's the bigger candle. So from that candle there up to sort of the top of where that bit of structure there is, that's what they would call an order block. It's consolidated there, and the big institutions don't take this as a trading education, because this is going to be very, very sort of a quick glance at this sort of a thing. But the big institutions could have buy and sell orders going here at once, hedging their bets. Okay, but they've pushed the market down here because all of us retail traders have said, okay, so this is support. We're going to put a buy order in here. We're going to put our take profit here, and let's say the market went down to about there. So we're going to say, okay, the market's sort of bouncing here. We'll put in a buy. We'll put our take profit up here just before the resistance, and we'll put our stop loss down here just below support. Okay. Surprise, surprise, the big institution's taken us just below that, and then the market will come right back up to here. It'll come back up to this order block because remember before I said they have buy and sell orders here?
Yeah.
As the markets come down, they've taken profit on their sell orders. They've taken out all of our stop losses. Then they let the market come back up here so they can close out their buy orders without taking a loss. And then the market continue the proper downtrend. Now, for anybody that's done just normal technical analysis type education, this is probably what you were taught. And this is true as well, but this is just another way of explaining it. So the market's trending down, okay? You've got this bit of consolidation here. So Jan will nod ahead when she hears this. So you've got some consolidation here. Then the market's broken out. This is what we would call a retest. So we've got the breakout, we've got the retest, and then the continue. So if you're doing proper technical analysis, like what we learnt with MBA and that, you get the breakout, but you don't place the trade on the breakout. You wait for the retest, and then you take out the trade. So you'd see this breakout, put a sell on. Okay, you could take little profit, but you could just miss that altogether because it's not, you're hoping for more. But then you get the retest and you lose that trade. But if you wait for the retest and then take a trade, you can catch a big movement down. So that's just two ways of looking at the same setup. You've got what they call the market makers type strategy with order blocks. And the reason that the market's coming right back to here is so those big institutions can close out their sell orders without a loss, and then they let the market go down. Just straight out technical analysis, we've got the breakout, we wait for the retest, and then we trade. So two different ways of looking at it, but with the same result, is that you would take out the trade here and do well. The other thing you can do, Barry, what you were talking about, is that if you've got, whatever the market's doing,
Yeah.
and you go, okay, I'm going to put a sell order, I'm going to put a buy order on here, and I'm going to put my take profit here and my stop loss here. And what did you say to me, Barry? Every time you do that, the market comes down to there and
Yeah.
then goes up. Okay, and he's right, it does, but for this reason. The other thing you can do is, instead of putting a buy there, put a sell there and just take a little scalp down to there, like if you're, there's two things you can do. If you're manually trading and you're always just getting tapped out on your stop loss, it just hits your stop loss and then goes up. There's two things you can do. One, instead of doing a buy, you could do a little sell and take a little profit. That would be not the preferred option. The best option would be when you get to here and you go, okay, I should be putting on a buy here and I should put my stop loss here, but hang on, I always hit my stop loss. Put your trade here, wait for the market to get to here and then put your trade on. Or if you think you should do a buy here, just put a limit order here. And if the market hits it, you get a good entry point. If it doesn't, well, you miss out on a trade, but that's better than losing.
Hey, so with this, Les, like these big institutions, like there's hundreds of bloody, not hundreds, but there's lots of bloody platforms around the world. But how could these institutions be looking at them all? Okay, so like you're saying, we're in the herd here, and the institution knows where the herd is, so they're gonna push it either way in their favor. But how can they honestly be looking at them all, or they're not?
I would say I'd be surprised if they're not looking at them all. I don't know for a fact, but when you have that sort of money, that sort of power and influence, you have your feelers everywhere. Now you got two different types of brokers. You've got A book brokers and B book brokers. B book brokers are, they're not dodgy, but they are. It's sort of like in-house trading. A lot of brokers are. And so they can potentially manipulate the market a little bit more. Not really, just sometimes it looks like a little bit more. Sometimes they actually do, but I wouldn't be too concerned about that. But then you've got your A book brokers, and the trading doesn't just go on in-house. As soon as you put in your order, they're just an intermediary, and they put that trade straight through onto the actual liquid markets, which aren't just in brokers. That's where all the institutions trade and everything. So anything that goes through onto that, the institutions are going to know about anyway, because they've only got access to the main platform to do that. But all the brokers, all of their information's there online.
So for argument's sake, Les, like you're using Pepperstone. Now, you do the trade on Pepperstone and it's all good. But does it actually go to an exchange, or does it stay with Pepperstone?
Not an exchange, but it depends on your broker and what sort of an account you have with the broker. And it's not always easy to know for sure, but you can ask your broker as well. But an A book broker, the money goes to the liquid market and it's not in-house. If it's a B book broker, then it sort of stays in-house and it's just the people on that broker that are doing the trading, or they're still using outside sources for actual price movement. So there's not a lot of manipulation that can go on, but potentially some could. But when it's just going straight through the main market, there's no chance of anything going on. But we've got software to analyze the market and place trades. That's what Trend Trader does.
So is there such a thing as an exchange, Les, or is it just all sort of in-house?
No, it's not called an exchange, but basically like an exchange. Exchange is really just, an exchange. I guess that's the right word as well. But so that's what I'm saying. The difference between A book broker and B book brokers is B book brokers, it's more all in-house. If you do a buy order, or it doesn't matter where you do it. If you do a buy, if you sell some euro somewhere in the world, someone's got to be buying euro. If you put in a sell order, you can't sell euro unless you got someone to buy euro.
Yeah.
Okay. And that doesn't mean there's some little guy over in the US there that's buying every time I sell, but potentially, sometimes things like the brokers themselves will actually, you know, what's the word? You know, they'll sort of fund the buys and the sells themselves in house. But if it goes straight to the liquid market, it's basically you do a buy, someone else has got to do a corresponding sell. So the smaller your broker, like the less liquidity there is with that broker, so the less money that people have going through that broker. That's why there's a bigger chance of slippage. Because if you've got a really big order and you try to sell $1 million worth of euro, they've got to try and find not someone, but some people's willing to purchase up to $1 million worth of euro. If they can't find that instantly, then the price could move past where your stop loss was, and you end up taking a bigger loss than what you thought you should have. That's what slippage is. The bigger your broker, and if it's an A-book broker, you have even less trouble because they can sell a much larger volume quickly than a smaller broker can.
So the likes of Pepperstone, Advantage,
Yeah, you know, Pepperstone's a big brokerage. It's a good, well-regulated, no
So
issue at all. Envy, on the other hand, nothing dodgy, but they have less liquidity. I've never had any issues with them, but if you tried to trade NFP, had a trade open prior to it, you could definitely take a lot bigger loss than expected due to slippage because they don't have much liquidity.
Yep.
That's still like billions of dollars, but compared to the trillions that go through the market, it's smaller, you know.
So is Pepperstone an A broker or a B broker?
I think they're sort of both, depending on
The
sort
size
of
of the
account you
account.
have.
Yeah. Well, that's answered that question because I often wondered how.
Anyway, that's getting all way too technical. Any more relevant questions, guys? Because I want to get going here tonight.
Yeah, Les, just a couple of quick ones.
Yeah.
Just interested that on your little squiggly drawings, what time frames are you looking at there?
The ones I just drew.
Yeah, you know, when you talk about them manipulating the market, what sort of time frames would they be working on?
All of them.
By the whole lot. Yeah, okay.
Yeah. So here's Des. Des, we just had a big talk about order blocks. Is Des here?
Yeah,
there he is. We were just doing a fork mount trading session.
really?
Not really, but I was just showing
Without
what
me.
order blocks were and how you know, the market retraces back to the order block because they need to clear their buy orders before they drop the market and all of that.
Yep.
We had a good chat about that. But I might get you to correct me if I'm wrong on this, Des, because Des is actually doing a training course at the moment with someone that there's probably a lot of good traders in the world, but he's the only one I personally know actually is an exceptional trader. He's doing a bit of a training course with this guy at the moment. But Mel just asked me, Des, because I was talking about, you know, how the big institutions manipulate the market. I mean, yes, they do manipulate the market, but if you know that,
Big
then
time,
it's on your head. If you can take advantage of that if you know what's going on. But Mel asked me because I drew some squiggly pictures, what time frames I'm talking about. And my answer to that, which I want you to double check for me, is that it can work on any time frame. You know, they can push the market on a 4-hour time frame down to where they want and still retrace it to an order block. It could be happening on the 1 minute, probably on all at the same time. Yeah.
Yeah. And to get a grasp on the idea of how much money is involved, on Euro US, we were looking at the 15-minute time frame, and a candle. This is probably going to sound silly, but let's say
I know what you're going to say.
15 mil, you know, really centimeter. A small candle. I mean, a decent sized candle in comparison to everything else that's around. Could be $2 billion to move that candle that far. So for them to manipulate the market, they're throwing serious amounts of money at it.
That's what I was
That's,
saying
that's
before. Like
amazing.
for them to pull the market back to their order block to clear their buyers, they're not scared to throw,
$100
I'm making
billion.
these figures up, but $10 billion to push it up, because then they're going to do the real trades.
That's right. It is. I mean, I'm only 2 weeks in, and we're still working the whole strategy behind the what we're learning. Order blocks is key. That's paramount to the strategies that we're learning. And yeah, I understand it, but I've still just got to fine tune before I'm happy to move on to the next level. I need to know what these are 100% every time without fail, just glancing at a chart. You need to be able to spot them.
There's some order blocks like the one I drew before. They're very obviously, basically it's consolidation, but it's an order block. It's easy to recognise. What I don't know much about, which what Des is just learning now, is much smaller little structures that are also order blocks, and identifying them when you need to is what takes a bit of learning.
It's learning where and being able to recognise, say, where one candle's wick will mitigate the previous candle's wicks or price structure. So while they're cleaning each other up, price is going to continue in that direction. And then, but as you'll see, what do we call it? Where it's inconsistent, and there's nothing mitigating, you can be sure that one of your order blocks is going to get touched again.
To put that into a bit of context that a couple more people might understand, so the type of candle structures you're talking about there could be something like a hammer, correct?
Yes. Yep.
Yeah. Not only that, but that
inverted
sort of thing. You've got something that's
right.
obviously
So,
indicating a change.
yep. And then you've got these, which is what we looked at last week, these sponsor candles, and your squeezer tops, where because you've got multiple institutions all trying to move the market for themselves. So one group might want it to go north, but then another institution will see their move and go shit, and quickly try and counteract it, and then it becomes a bit of a tug of war. So but wherever there's liquidity, each other will come along and try and take it from the other. It still sounds double Dutch to me to a certain degree, but the concept is the same. Wherever there was money, there is still money, and it's up to whoever takes it to that place to pick it up, basically.
So what Des is saying is that basically, if there's some consolidation in the market, that's because there's two big institutions fighting over which way they want it to go.
That's right.
This is a rough example, and that's what that would be causing what I would call an obvious order block. So then, once the market breaks, whichever way it breaks, you can be pretty certain that at some stage that market's going to come back to there before it does what it's going to do long term.
And you can have your order blocks. They need to become. They're not all going to be valid. You'll see where an order block is sitting on obvious support or obvious resistance. Then it might come back down towards another order block, but then might turn around and start forming, say, a rising wedge, falling wedge. So then you start to get confluence where there's multiple signals all sort of leading to what's going to happen next. And you can begin to start. That's how you can start seeing how to plan ahead.
Instead of just trading off an order block, you know, you've got, you know, an order block that's on support and it's in some sort of a, you know, flag pattern or whatever. So you've got three things saying that the market's going to go up.
It's just I first sort of saw it as support and resistance, but the more it's getting broken down for me, it's the more obvious that support and resistance is it's there. It's important. You can't not see it, but there's a lot. The smarter money isn't always aiming for those zones. There's other zones where there's big money sitting.
It was just sitting out the back, you know, sharp.
And that's why retail traders are often caught out.
Up to 10 times. And then,
But
yeah,
within the next 8 weeks, 12 weeks,
really,
hopefully I can get a lot more of this to sink in and put it into a language I can understand, because
Well,
even
if you
though
can put it into language you can understand and explain it to me, then I can explain it to Trend Trader.
well, that'd be nice. Or we just go to the source.
I've been meaning to catch up with him because he wanted to have a bit of a chat because he hasn't been able to find anyone to build him an EA that can do that. So
Well, I had a chat to him very quickly and briefly on one of the calls, and there is not the whole strategy, not the whole concept behind his strategy, but there's certain structures to it that even on their own will be quite profitable, that will be
yeah,
a lot simpler to code up.
yeah, exactly.
Well,
Like,
I know
you
a
get
simple
the whole thing.
coder,
It's like
so
even some things. I still believe there's nothing you can't do manually that you couldn't code in, but some things are a lot more complicated. Obviously, Trend
Well, I
Trader's
mean,
not too complicated as far as coding goes, but compared to like the memory space that Trend Trader takes up is over double what it used to be when I first brought it out.
yep, that's
So I've
evolving.
got more than twice as much coding there now as what I did when it first came out.
And what's that mainly? Is it aiming? Is that more things like your partials, or your is that aiming for a more accurate entry?
No, so that's just I was just talking about everything that I've put into
Just
Trend Trader
everything
really,
in
but
yeah,
um,
yeah.
but it's only this newest version that's got a little bit more to help the entries out. So now you've got an entry type setting, so you can choose 0, 1, 2, or 3.
And not just yet, yeah.
You know, so that's got a little bit more, but it's still essentially the same, just some slightly different calculations on the different entry types.
I was
Can
also
you explain that a bit more, Les, about how it works with 0, 1, 2, 3?
Didn't I just do that before?
Oh, you didn't say what the differences were between them. You said it was on the last move, but
It's not.
is 0 low and 3 high entry?
No, nothing as simple as that. It's just slightly, you know, like what I've found is, you know, some pairs need more confirmation before it's really valid, and others, as soon as there's the slightest indication of confirmation, you're good to go on a trade, which means you can get in earlier, make more profit. Others not so certain. So just, and they're not. It's not like just one low, one high. Well, one, like actually two will always give you less trades, but probably more accurate. But sometimes less accurate, but more trades actually turns out more profitable. But yeah, it's not just high or low. It's just a different way of calculating it, which seems to work on some pairs and not others.
Okay.
we were talking the other day. We were showing. I asked a question on, because we're doing all of our study on Euro US. It seems to be the cleanest moving of the pairs. And I asked, I said, well, what can we just jump on some others? And he said, stay away from the JPY pairs. They tend to be a lot more wicky. So that probably, whether that's sharp volatility.
Yeah.
I'm gonna.
It depends.
that's
It
something
depends
I've
how
got
you're
to note
trading.
this
Like
afternoon.
I know what you're saying for what he's trading manually like that. For trend trader though, that sharp volatility
You
works in
need
the
that
favour.
volatility. Yep. Something else and you've probably already gone over it, is like there last week on the Friday, we had all those buys. What was it? G Day, E Day. There was
Yep.
a lot of what do they call it? You know, we were caught with the same trade basically going on with multiple pairs because they were all
Yeah, because they're
that's not the
correlated
word.
pairs. Yeah.
Correlated, that's the word. That's something I've sort of set up. I'm going to set up the new one tonight. I'm sort of thinking I might limit the JPY pairs rather than. I'm not even sure what ones you've got there.
Yeah.
But, or just have a look and see. You've probably already addressed it with the time frames as well. Just make sure that there's not, G day, E day, all on 15-minute, or have something on 5, maybe.
Actually, that is something I'm looking at bringing into a future version. Is a bit of a correlation filter.
Yep.
So that if you've got a euro yen and a pound yen open, it won't let a US yen open.
Yeah.
Something like that too. That shouldn't be too
in the
difficult. I
same-
think that's within my capabilities at the moment.
If it's not, I'm sure it's just another 26 hours of YouTube.
Yeah, exactly. And I do have a trailing stop loss feature for Trend Trader that's good to go. I know some people have been asking about that, so I can pump that out whenever.
Would that do away with your first profit lock, or will it come in afterwards?
Well, I haven't done enough testing yet. So using it on top of the 2 profit locks, it's not really much point. But what I'm thinking is maybe use the first profit lock and then the trailing stop, like I do with Volatility Master. That might work out better. I've also half got a profit protector feature, so you can set a weekly goal, and when you hit that goal, when your equity hits that goal, it'll close all open trades and stop trading. So I've got that in the works. And the other thing I might
think
look
that'll
at,
be really good.
yeah, another thing that I'm looking at is, and I thought about it a fair while ago, but I didn't see any point back then because Trend Trade is such a low volume of trade, I didn't want to limit the trades even more. But now we've got some pairs that are taking out 90 or 100 trades in 3 months. So not, compared to previously we're looking at 20 trades, now we're looking at 100 on some pairs. I'm thinking about putting in a time parameters like Volatility Master, so that it'll only start trading at say 6 p.m. our time and stop at 3 a.m. the next morning. So basically say it waits until after London. Wait until after London opens and give it a little bit, and then start trading and just trade London, New York, and then stop trading.
Yeah.
I don't know whether that's going to make any big difference, but I'm going to have a play with that as well.
I honestly think that's a top idea, Les, because
it could be, but I mean, I've had, just without trying to be too immodest, I've had quite a few extremely brilliant ideas. They've been fantastic. And once I've coded them in and got them working perfectly, it didn't help. So we'll see what happens. But that's another one I'm looking at. The reason being is, I'm not saying you can't trade the Asian session and do well, but you get a lot less movement. And our Trend Trader mostly aims for fairly big movement profit, so it's not scalping. To hit a take profit is quite a significant move, which generally that much movement doesn't happen during the Asian session. It doesn't mean that it can't get you halfway there and London and New York finishes off, that's fine. But what happens with the Asian market session is that the market can go up and down like normal, and that small up and down movement could open up trades. But then the market,
And then
once London opens, it'll
once the
choose a
volume
different
comes in.
direction and go hard that way. So waiting
Yeah.
until after London tends to give you the correct direction for a bigger movement. The Asian market will give you the correct direction for a small movement, but then that could all change after London opens and it could go bad. So potentially that could make a significant difference, but I won't know until I do it and do some back testing.
Is that going to be hard to write into the program, Les, so that we?
It was bloody hard, but I
yes.
already done it. I've already done it and got it working with Volatility Master, so I know how to do it now. So not hard now.
Yeah, so like if we could get away with not trading, like I don't like the Asian session at all. I never have. I like the Northern Hemisphere. Like this is like that's when it all happens. Is when London opens, and especially when New York opens.
Yeah, I don't think it's got anything to do with London and New York. It's just as soon as I go to sleep, the market does its thing.
Yeah. But like, you know, you can sit and watch that Asian session day after day, and it's like watching paint dry, isn't it? Like nothing happens.
But I might make that the priority for, you know, the update. I'll let you all get this one done, and then I'll bring out the next one. All right.
Yeah, that'll be good.
Just so you know, at the moment, the software is called Future FX Trend Trader Plus. The name doesn't have the version in it. If I just share my screen. Okay, if you have a look here, that's the name of the software, all right? If we have a look, I don't have it on there, but the old one was called Trend Trader version 6.0.
Yep.
Okay, so the name had the version in it. So all the future updates I do are going to be called Future FX Trend Trader Plus. So the name's going to stay the same, but if you go into the properties, you'll be able to see the version to make sure you got the latest version.
That'll
So-
be plus version 1.0, 2.0.
Yeah, exactly. But you won't see that in the name of it. So that'll mean that when I send you a new upgraded file, all you'll need to do is download it, install it in the experts folder, and click refresh.
Ah.
And it will be on the charts already with
Oh,
your old
nice.
settings already.
No more having to go.
I'm
Click,
pretty sure that's
play.
how it'll work. I haven't tested it, but that
Yep.
should work like that, which will make it
Makes
easier
sense.
to upgrade to the newer versions as we go along. Because
What
as you
about
just
if
heard,
there's new parameters?
that they'll up. You'll have to adjust them, but I try to make the new parameters either what suits or what is low risk. Then you can change them to suit however you want or to suit the individual pair. So if there are new parameters, they'll have to be changed, but all old parameters should stay the same.
So that when I download the new version, it'll just be the default settings for the new parameters.
Default setting for the new parameters, but what you've already input for the old settings.
They'll remain the same.
I
You're
think so.
guessing-
I'm hopeful so.
We'll find
I
out.
haven't tested it yet, but that's well, I assume that's how it should work. But I've had a lot of experience with some of my MT4 platforms have got like 12 versions of Trend Trader on it.
The question, Les, if you started trading the UK session and the New York session, and it stops trading at say 4 o'clock in the morning or 3 o'clock in the morning, but we've still got trades open, that would go into the Asian session, wouldn't it? Like it would still carry, but it wouldn't do any more buys or sells or nothing.
That's what I'm looking at. Like because Trend Trade is a bit like swing trading. You know, some trades literally will take a week or more to play out.
Yeah.
there still will be some trades open during the Asian session left over from the night before. So we'll just see what happens. It could turn out that I change the optimized settings to go for smaller pip profit so that they all get in and out pretty quickly during the London New York session. I don't know what I'll do yet. It'll be all based off what the back testing tells me, really. But I might make that time parameter my priority just to see how that works and let you know.
Be very interesting to see how it works.
Anyway, guys, I'm going to get going. I was trying to make this a short one. That didn't work, but you get that.
So with just quickly, with stop losses and take profits on this plus version on the new one, are they much the same as they were on 6 or 7?
No, they're significantly different. They've all got
Okay.
a much better risk to reward ratio.
Yeah, I thought I did. I quickly glanced through it, but I didn't have time to.
Yeah.
look
So
properly.
that was good. I mean, the risk to reward we had prior was what worked on back testing, but now with the new entry types and everything, I've been able to, might not necessarily always mean more profit, but I've got the risk to reward ratios better, profitable.
Be a lot better on the heart, I think.
It'll be, so that, that should mean, more bigger profits compared to the losses and all of that. So I like, obviously, as a trader, I like to have a good risk to reward ratio. They just simply weren't all good. They still worked out profitable, but they weren't what I would call a good risk to reward ratio prior to now.
Well, it only took one. It only takes one hit stop loss, and you need a hell of a lot of partials or even a take profit on some of them to bring it back, doesn't it?